right, back to it. I keep watching these things, and we talk about this pretty regularly with Nick Hopwood. He's the president and founder of Peak Wealth Management. Joining me now, we talk about the economy. Nick, welcome back to the program.
Thank you, Steve.
I keep looking, and I'm just going to get you a quick overview. Gold is now almost $4,200 an ounce. I mean, it's gone up $500 in a month. Indicates a pretty weak dollar. Silver at $52, setting all-time record highs, as has gold recently. The market had some big booms, a couple of retracing, but really, whether it's gold or the markets, crypto was up there big for a bit. Then a lot of people took money, so we had a bit of a crash. I expect it's going to come back too. A lot of good news out there, but are those red flags as well?
There are, and I want to bring up gold, as you mentioned. Your last guest, John, he was talking about how the market is betting on the U.S. and allowing us to have these debts, right? I want to draw an analogy, right? If your mother is 300 pounds overweight and she's feeding you cake for breakfast, that's kind of like the analogy that comes to mind with it's okay to keep having more debt. You know what I mean? But
Yeah.
it plays into this gold because with the debts, with the dollar falling, gold is in dollar terms, so the price of gold continues to go up, right? This is the symptom here that we're seeing as a result of the deficits, and it could trickle into other areas. Now, as far as buying gold, it's gone parabolic. So my suggestion, I should say not my suggestion, but my feelings are we probably could have a pullback, and that would be a better time to consider it.
To buy gold, that is. I agree with you.
Yeah.
The bull market we're in just turned 3 years old, you said. How does this compare to other markets over the last 60, 80 years? The first time I came here with you, about the first time you showed up here is when this all started. Where are we, historically speaking?
Yeah, I want to thank you for having me on for the last 3 years. But basically, that's when the market hit its low in 22. So we're 3 years into this new bull market. The average length of a bull market is about 5.5 years. So we're just starting year 4. And just so you know, the average in year 4 is typically 14%, and it's typically higher 85% of the time. So the statistics are pretty good in our favor here. And so far, we've had an 89% return during this bull market. But look, the last 11 bull markets have averaged over 190%. So we're not even halfway as compared to, the last 11 bull markets.
So 14% plus based on mathematical averages. Why? Why does that happen? Why is year 4 another good year? 14% plus. I think everybody listening that has an investment would take that happily. I would. Why does it keep happening?
Yeah, I would absolutely take 14%. So I think part of it is earnings. We talked about this last time I was on. Earnings are continuing to grow. Over the last year, they're up double digits. And that's, in my opinion, the most important thing. But secondly, we've had, these animal spirits, right? Where we've had, it's called multiple expansion, where yes, profits are higher, but the market is growing by more than the profits. And that's what cannot continue. But we do have those animal spirits now, and it can continue.
I wondered what that was when I woke up today. Apparently it was my animal spirit. And now I know. Thank you for clearing that up. Look, I just mentioned this. The crypto markets took a flash crash, I think is what you called it. The crypto bros who used extreme leverage, man, they got crushed by playing games. When you play games, you're playing in dangerous territory, aren't you?
You are. And on Friday, after the Trump tweet, the S&P went down 3%, which is a pretty terrible day for the stock market. But the coins, the crypto market, was way worse. Bitcoin was down in the neighborhood of 10%, but the altcoins down 20% to 80%. And it just goes to show, if you're going to be in the crypto market, you want to be in the higher quality assets, especially if you're considering your risk tolerance. But a lot of these guys got completely wiped out because of the amount of leverage that they were using. In a brokerage account, you can only use a certain amount of leverage. It's highly regulated. But in crypto, it's much different. You can be leveraged worse than Bear Stearns back in 2007. And so when you have a flash crash in Friday's nature, they get completely wiped out. They get liquidated, kind of like a margin call. but it happens so quick that there's nothing you can do about it.
Yeah, and if you put your money on the gambling table, these things can happen in the Wild West. I just saw an update to the gift tax for the coming year. $19,000 means I can give anybody $19,000. There's no tax implication to them or to me, correct?
That's correct. It's $19,000, and people often are confused about what this means. They ask me, "Well, if I give my son $19,000, or more than $19,000, does he have to pay tax on it, or do I have to pay tax?" And the answer is no. No one is paying any tax. In fact, it's tied to your estate tax exemption of $15 million per person. So the reality is, if you give your son $20,000 instead of $19,000, you've taken $1,000 away from your $15 million lifetime exemption. So it's really nothing for most people, that is.
Right.
And you can also, let's say, Steve, you and Ivy are married and your son is married.
Yep.
You can give 19 to your son, 19 to your daughter-in-law. Ivy can give 19 to your son and 19 to your daughter-in-law for a total of $76,000 per year. So this can be compounding over the years if you do it right.
I'm glad they're not listening. I'm glad they're not listening. By the way, let's get that QR code up there if we could, or you can go to peakwm.com. Nick, as a listener to this program, will provide you a free beneficiary IRA analysis. The new inherited IRA rules are tricky, causing a lot of confusion and headaches for people, especially when it comes to taxes. So don't let your inherited IRA push you into the 37% tax bracket. Don't let that happen. Protect your money. No lazy money with Nick Hopwood. That's the way it has to be. No lazy money. That's what we call it here with Nick Hopwood. Nick, thank you as always.
Thank you, Steve.
And take advantage of this with Nick. It's free. He can tell you how you're looking. How is this IRA working for me, for my kids that want $76,000 a year, or whatever it might be. All right? peakwm.com, or click on that QR code, a free analysis from Nick Hopwood. I'll be right back.